webinar is pointless. All right. Defining an uptrend, right? How do we really define an uptrend? When candles are making higher highs and higher lows, now basically what some people do is now some people what we've been taught is now, okay, so one more thing I want to mention is when you're coming into the webinar, come into the webinar with an open mind. Forget everything forget about Fibonacci's, forget about harmonics, trend lines, forget about every single indicator. Just come in this with a fresh, open mind, like a little newborn baby, right? So what we're taught is that, okay, for an uptrend, market structure is going to make highs, lows, highs, lows, highs, lows, and yada, 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 and we're going to have a good day, right? So basically what we see is that, okay, well, market structure is making this low, it's making a high, it's making another low, another high, and if you just buy over here, your price will go in profits, and then it will come down, then you will buy over here, price will go in profits. I mean, that's what we're told, right? That's all perfect. That actually works. But what this basically means in terms of candles is what we're going to look at right now. A lot of the things are going to be very, very repetitive things because like once you repeat a certain things a number of times, you understand that much, much better. So there's going to be no new information. It's going to be a lot of repetition, but in a very simple, concise manner. When price is trending bullish, it needs to respect the lows of the previous candles, right? I'm not going to mention the trends. I'm going to mention the candles. So basically, let's say you have a support formed. Now, you have to understand that, okay, if you're going to see an uptrend, where does an uptrend start from? That's what you have to understand. An uptrend starts from, okay, let me just bring up the chat over here. All right, so the chat is up now. I want to know, where does an uptrend start? Support, perfect. Benny said uptrend starts from a support, which is obviously perfect. So if you have an uptrend starting from down over here and candles are moving up, right? Where do you think would be a better buy? I personally think a better buy is going to be right over here. Right? If you can get a buy at the bottom of a support, I think that's an awesome position to be in. But obviously, like these things don't happen all the time. So basically what we want to do is we want to have a buy just above the support, But as the candles start leaving the support, now this is really important. As the candles just start to leave the support, the probability of the candles coming back down, it starts to increase. Right? Which is why sometimes when price is trending up and you want to take a buy somewhere over here, you see a little bit of a retracement, right? Or you see, hey man, like every time I enter a buy, price goes the opposite way, because you're not taking the buy near the support. You're taking the buy after the candles have already lifted off of support, right? So that's very important. So let's look at the candles here now. All right, so let's say we have this hypothetical support right over here, right? You have a candle coming down, so we're gonna assume the green candles are bearish candles. Rakil didn't really do a good job here with the coloring of the candles here. So let's say, okay, so now we have a candle closing bullish at support, right? So we're also gonna assume that the time frames that we're looking at, they're all 30-minute time frames and 1-hour time frames. The reason why is, now this is also really important. The reason why I'm going to talk about more about the 30-minute and the 1-hour time frames is because when you see confirmations on a 30-minute time frame, what you're going to see is now the confirmations are not all going to be, well, they'll be very good confirmations, right? But if you're, let's say, looking at the 15-minute time frame, the 15-minute time frame are going to have a lot of confirmations, but they will be weak confirmations. Right? If you're looking at the 30-minute or the 1 hour, you're not going to get as many confirmations as on the 15-minute or the 5-minute, but they will be very strong confirmations, right? The quality is going to be really high on the high time frames, but the quantity is going to be low, right? If you're looking at the smaller time frames, you're going to get a lot of quantity of setups, but the quality is not going to be there, which means that the confirmations are not going to be as strong. There will be a lot of fake outs on smaller time frames, which is why if you look for confirmation on the 5-minute or 15-minute, sometimes when you're trading, you'll see that candles just start to go the opposite way. And you're like, man, this doesn't make any sense. Like, why am I losing all the time? So let's move along over here. So now let's go back. So once this candle is formed bullish, right? Once this candle formed bullish at like a strong support, now you're basically anticipating the next candle to continue bullish, right? Now, two things are going to happen. You know, someone who's really experienced at this stage, what they will do is they will say, okay, you know what? I'm going to take a buy right over here, right, as the next candle is starting. And for this buy, now you have to identify where you're going to place a stop loss. You know, your stop is going to be placed below this current candle. Because now, if you're looking for trends, if you're looking for buys, obviously you want price to make higher highs and higher lows. And the only way it's going to do that is if the next candle makes a higher high and a higher low. You know, now you have a candle which has made a higher low, the bottom of the wick, and this has made a higher high, the top of the wick. You know, now you've taken a buy and price is now starting to move in an uptrend. You know, so let's see what the next candle does over here. Next, price, you know, it starts to make higher highs and higher lows more. You know, so whenever you're looking at these candles as they're moving up, you're not looking at how, you know, the market structure is making trends. You're looking at the candles themselves. Because when you can identify one 30-minute candle and you can identify the next 30-minute candle, what this is going to do is now this is going to make you believe that, okay, like, you know what, maybe I only have to predict one 1-hour candle, or I only have to predict just one 30-minute candle, right? So this is how you're doing your trends when you're taking your entries. Right now, at the same time, someone might say, okay, like, you know what, how are you going to enter another position at this time? You know, you're always entering another positions whenever there's like a pullback, you know, some sort of a retest. That's when you're trying to enter positions. So let's take a look here. Now, price started to move up. You know, as price started to move up, someone said, okay, you know what? Price is moving up. We bounced off from support. We're making higher highs. We're making higher lows. So I'm going to take a buy right over here. You know, and as you take a buy right over here, what happens is that you get a candle closing bearish, right? You have a candle closing bearish. Now, if we remember what Warren Buffett said, Warren Buffett says that always buy low and sell high. You know, and what he means by that is if price is trending bullish, you know, there will always be some sort of a retracement. Whenever there's a retracement, and after that retracement, there's going to be a support formed, that's the low you want to buy. You know, you're buying at that low, right? You're not buying just because candles are going up, you're buying at the lows. So what we're going to do is we're going to see what the next candle does over here. So let me just remove this. Remove the arrows here, and let's go to the next candle here. Now, next you have candle going down, right? So now this is a main uptrend going up, and now we've started a minor downtrend. So let's say, for example, let's say you had an entry right over here. You had a buy, opened right over here, price moved up over here, price moved up here. So what you did is you basically secured your profits, right? Let's say you secured 70% of your position, and now you have only 30% position running. So let me just write this here. So your buy is 30% running, right? So you have a 30% running at this point, and now what you're seeing is you have a candle that closed bearish on the 30-minute time frame. If a candle closed bearish on the 30-minute time frame, what does this mean? This means we formed some sort of a resistance here, right? We all can agree with that now we formed a minor resistance, and now since the candle closed bearish, there was a higher chance for the next candle to go bearish as well, which is now you see this candle going bearish. So now you're already in a position here, and candle is coming down. So now what you're waiting for a candle to close in your direction if you want to add another position. This is really important, right? Whenever you're looking for buys, you're not buying when candle is dropping, man. You're waiting for candle to close in your direction. You're waiting for candle to close bullish so you can tell yourself, hey, listen, let's say here, listen, Andre, you know, now if you want candle to go up, you want the next candle to close bullish so that you have much higher confirmation that the next candle is going to continue going bullish. So basically what we wait for is we wait for a bullish candle, right? So as the candles are coming down, you're just waiting for candle to close bullish. At this stage, you still have a runner running. Now, whenever you have a runner running, there's a very high chance your runner will get stopped out at break even. Now, sometimes guys ask, oh, break even? Don't you put stops above commission? or above a spread or something like that, that's all personal. Wherever you put your stops at break even, it's up to you whether you want to give it some room for commissions or give it some room for spreads. That's all up to you. I just put them at break even because I feel comfortable in that way, and it is what it is, right? So perfect. Okay, so you have a candle closing bearish right here. So when are you going to buy? You're waiting for a candle to close in your direction. And let's say you have a candle closing like this, right? You have a candle closing bullish. Now, basically, you formed some sort of a support down over here. When you form some sort of a support down over here, this is the point where if you have a runner running, you're able to add another position. Because if we're bouncing, someone is raising their hands, please put your hand down. It's messing up with my screen over here. So let's say when price was bouncing from support down over here, you had an entry, price came up, now it came down, and when you have a candle closing bullish, it's now making a minor support. And price always goes up from support. So at this time, you can say, okay, you know what? You know what I'm going to do? Let's say ribbons. At this stage, you know what ribbon's going to do? Ribbon's going to say, okay, you know what? Candles closing bullish. I have an entry running here. I think this is a time where I can enter another position right over here. But the first thing you want to ask to yourself is, okay, if I enter a position here, will my stop loss be down over here? Or will my stop loss be down over here? This is really important, right? So at this stage, your stop is going to be below this fresh support. Your stop is going to be below this candle because you're anticipating the next candle to make higher highs and higher lows. You're not anticipating the next candle to break the low. You're anticipating it to go up. So if you look at the next candle, next candle starts to go up. Because it has to respect the previous low. If, for example, now someone might say, oh, what if it breaks the low? So what if for example, let's say the next candle kind of like, forms like this and breaks the low of the previous candle. If the candle breaks the low of the previous candle, this means the probability of the next candle to go up has now decreased. Right? Because if trend is heading up, the trend is respecting the lows and it's breaking the highs. It's making higher highs and higher lows. So the candles, they have to do the exact same thing. Candles have to make higher highs and higher lows. That's when you have clean moving trends. And whenever you have clean moving trends, these trends only happen at when there's volume in the market. And we've already talked about having volume in the market. So let's take a look at the next candle. And next candle starts to head up. And now you not only have 30% running from down over here, you have another position running from down over here now. Now you have two positions running. Now you've added another position to an already winning trade, right? But at the same time, guys, listen, you really have to keep this one thing in mind as well. This will not happen super quick. This may not happen in the same session because this is a 30-minute candle. You entered a trade here, right? You waited 30 minutes. Right here, you waited 1 hour. Right here, 1 hour, 30 minutes. Right here, 2 hours. Right here, 2 hours, 30 minutes. Right here, 3 hours. You waited 3 hours to see this happen, and now you're like, okay, you know what, since I'm in this trade, I waited 3 hours for this shit to form, and then you took a buy, right? Man, if you only waited 2 hours and you entered a buy over here, you were in a drawdown and you were like, your emotions were all over the place, only because you didn't wait for a candle to close in your direction. Write this down. If you're looking for buys, you have to wait for a candle to close in your direction. It's very, very important. It's like when you go to the bus stop, right? You go to the bus stop and you want to go left and all the buses are going right. What are you going to do? Are you going to jump on the buses that go right, thinking that it may move left when it's going right? No, man. You're going to sit your ass tight over there at the bus stop and you're going to wait for a bus to go left. As soon as a bus going left comes, you're going to jump on that bus. Trading, same way. The reason why you guys lose is because you're not waiting for candles to close in your direction. You're basically guesstimating, right? You're guessing. You're saying, okay, since we're in an uptrend and these candles are coming down, right? Let's say you're talking about this candle, you're like, okay, this candle's coming down, I'm going to take a buy because this candle is going to flip bullish, man, when it's bearish. You know, how can you say a candle is going to flip bullish when it's going bearish? No one knows that. You know, sometimes it does happen, but the probability of that happening all the time is just not there. You know, so you have to look at it in that sense. Now, let's see what happens here in the next one here. I think, okay, awesome, perfect. So when you're looking at, like, let's say, for example, this was the 30-minute time frame, right? This was a 30-minute time frame. Now, what will this look on, let's say, the 4-hour time frame? Because now on the 30-minute, you have market structure forming support, making like a resistance, and then making a low, and then heading up. And now we're reading the candles. As candles are making higher highs, higher lows, we had a buy over here because apparently this was a strong ass support. You took a buy, price came down, formed a bullish candle, and then you took another buy, and now you have 2 positions in profits, you know? Perfect. Now, what will this look like on the higher time frame? Let's say on the 4-hour time frame. Let's take a look at that right here. If you're looking at the 4-hour, this is what's going to look like the first 4-hour candle, right? If we're just looking at this one candle, we're estimating that, okay, this 4-hour candle's low was right over here. I'm going to go really slow over here, right? This was the low of the 4-hour candle, and this is the low of the start of the 4-hour candle. Make sense? This is where the 4-hour candle started down over here. It went up. It made a high right over here, which is the high right over here formed, right? And then it started to move down, and then it closed maybe, let's say, right over here. And this is the close right over here. The 4-hour candle is closed, right? So if you're only watching the 4-hour candle, and if you're seeing that, okay, 4-hour candle is at support, now you're basically saying, okay, if the 4-hour candle is closing at a support, there's a very high chance the next 4-hour candle will also continue moving up, right? And the only reason the 4-hour candle, the next one, is going to move up if you have confirmations on the smaller time frame right over here, which is you had an uptrend, you know, right here, price went up, and then you need a candle to close bullish on the smaller time frame to give you an idea that, okay, maybe now the next 4-hour candle can continue moving up. You know, if the small time frames can make higher highs and higher lows on candles, this means the next 4-hour candle will ultimately continue moving up. Right? So, oh, yeah, let's go to the next one right here. Okay, perfect. So this is the basic definition of an uptrend. This is how you add positions to uptrends. You're waiting for minor supports to be formed. Now, mind you, these supports will not be perfect all the time. You know, sometimes you may get, you know, like price wicking here and there, but for the most part, you will get these supports. Let's move on to the next one here. Actually, what I want to ask is, how's my pace? My pace is good? Not too fast, not too slow? Yeah, I think it's pretty good. Okay, perfect. Yeah, time to send everyone back to the gulag now. All right, everyone back in the gulag. Okay, so defining a downtrend, right? Now,